All right, it's that time again. The market's closed the first day of the week, and what a strong rally back on the S&P 500. Huh? Look at that bar, monster bar. And I got to believe that people would want to take part in that bar tomorrow. But regrettably, we still have the Feds hawking over us. Today we had Fed Williams, and he really didn't have much of an effect on the market. And I'm wondering if that's eating on his self-image. Because Bullard got on here and he was making news. So I don't know what he said. I couldn't find a stream for him. I mean, the poor guy can't even get a stream. So there was really no effect. I would like to see the market open up halfway at the midpoint tomorrow. So really, if it opened up down 20 points, I'd feel good about that and then made the move up. I think that would be nice and healthy. But if you look at the daily chart and you fib from the low to the high, we made a pretty healthy retrace down to about the 50% off of this long move, and then we turned around and came back, which just tells me that we're in this bull market and it's sustaining based on today's trades. It's very positive, and I'm sure when we look at the 60, it's going to be bullish. But at this point, I would definitely say that 42.81 would be our next target on the move up. Obviously, not tomorrow, but I think that we're going to start grinding up there. We may, have a couple of retraces. We'll probably have 3 or 4 bullish days. Test here, have 1 or 2 retraces, and then try to make that move for that target up there. This is what I truly feel. In my analysis of what's going on, I think that the inflation picture is overstated. You could see commodities rolling over right now and coming down. Obviously, that lends to inflation. I don't think that the opening is going to be as hot as they're anticipating. I think that there's going to be a lot of action and earnings are going to do well, but I also see a lot of people getting laid off, a lot of local folks. Like finally, the companies are reaping the effects of the lockdown and the hard year that they just went through, and they're thinning out their staff. So I think all things being said, the inflation issue is overstated. I do think that the interest rates are going to be moved up and asset purchases are going to be tapered because it's just prudent, and it will give us some ammunition or a little something in the war chest in the event that we do run into economic issues. But I say that the bull market continues. Just a quick look at the 60-minute, and we'll just go through this again. Obviously, bullish momentum. So, as of now at the close, I would be bullish on everything. I even did a bearish spread that I'm probably going to have to defend before its expiration, which is fine. That's just the nature of the business, and I could use the exercise. So yeah, things are looking pretty bullish. But again, we have Fed Powell tomorrow, so anything can happen. Anything. On the daily, let's take a quick look at some of the stocks of interest these days. BB. That's a nice tail to the downside, but this baby's just sleepy. But that's encouraging right there. It's bouncing off of that support, which a gap usually is a line of support. So it's bouncing off of there. If it breaks through, it's definitely going to close that. And the most you can expect out of a gap is probably half a gap full. But it's not impossible that it closes all the way. But the momentum is terribly bearish on this. And so there's no interest. But again, it shouldn't surprise you with all the Feds out there. Who's going to waste buying power when some Fed could talk down the market and blow it up? Which is going to be the theme of our afternoon wrap. And then on the 60-minute, that's encouraging. The 60-minute still, you could say this 60-minute on this is bullish. And an entry on this trade would be, theoretically, yeah, you know what? I would go with that. Breaking 1296, based on how I enter my trades, I could probably take a trade right there. But obviously everybody has to figure out their own risk patterns and things like that. This is not financial advice. Bear that in mind. Mainly because I don't know your situation, so I couldn't competently tell you what's going on or how you should trade the markets. But I could tell you what a setup looks like. And this one looks mighty, mighty sad, eh? It closed the gap, and it's actually pushing through. The momentum is down aggressively. And on the 60, bink. Well, the 60 looks like it might be making a double bottom. You're just going to have to watch that. You can see the momentum moving up. It obviously would have to break this high to really be a bearish momentum. But you could see it rolling around, so it may happen. Any of the sell-off, I'm still prone to blame it on the Fed. Blame it on the Fed. And then last, equity-wise, is AMC. AMC. Let's start with the daily, and the daily is rolling over. The momentum's rolling over, and it's not all that encouraging. But yeah, there's nothing here to make me nervous. I mean, it's holding the 8-day moving average, which that's the 8. It's holding the 8-day moving average, which that's very encouraging. That shows good support. It's not breaking down. So the lack of momentum in it, again, I'm going to have to blame it on the Fed. Who's going to waste buying power when the Fed could talk the market down? So it would be prudent just to get those guys out of the way and then start your push and start your move. And I think that's what's going on here. I think anybody who knows what's going on in the market knows that you really can't consider the movement of a stock with these variables out there. And once the Feds are out of the way, I think that it'll be free to move. There's nothing here telling me that the bulls are losing the fight. I mean, it's consolidating, and the time is irritating, and that's basically why I'm not in the trade. I would be so frustrated that I would pull out, and I'm ADD, so I want that instant gratification. I do my day trades, and that's it. It's a wrap. I walk away. So my hats off to all you guys who could put up with this. But I see no reason yet to abandon this. This is, a little vicarious. It's trading off, but you got to take it with a grain of salt with the Feds out there. And let's just look at it on the 60, and we'll have an idea of what the day held. So, this is a little negative on the 60. So it's not terribly encouraging, but it's not discouraging either. And again, even if it was madly discouraging, I would take it with a grain of salt, because you just don't have an orderly market. You have extenuating circumstances. So there's a lot of people sitting on the sidelines just waiting for the Feds to get done. They don't want to waste that buying power. When they get this stock moving, and then one of the Feds say something unexpected and then force the market down, which kind of is exactly what you saw happen on Friday. And I was on the sidelines on my trades because I know that it's probable. It's just probable that that's going to happen. So why trade in an environment where the probabilities are stacked against you? So hang in there with this trade. It may happen. And you should only be trading funds in a situation like this that you absolutely have no problem living without. And if it causes any discomfort in your life, you should not be in that trade. So here's Bitcoin on the daily, and the momentum's moving up, and this is dipping down. And from a trading aspect, I would say that I'm looking at a buying opportunity. I would look for a hammer or something and maybe take an aggressive entry, but a conservative entry would be around the 41,355 move, and then your next target would be around 49,230, and then I'd look to take some more off, testing this high right here. And obviously Bitcoin traded off because China is jumping up and down about it. And you can understand that China likes to keep a tight hold on what goes on in their country. And the last thing they want is somebody to be able to convert their dollars, their yuan, to digital currency and get it out of the country. Because despite the pretty face that China puts on it, everybody there would like to get the hell out of the country, or most people would like to get out of the country. They certainly want their money out of the country because, with that regime, they can knock on your door and take everything you got. You notice you don't hear about Ma that much anymore, and they kind of smacked him down and told him to shut up or they'll take all of his toys away. So, nobody wants to live under that kind of that reign. And on the 60-minute, it's just kind of curving around. You could see the effect of the day, which was, very bearish, and the effect of the news, which brought it down. So look at that big monster gap. It's got to clean all that up, but that's all right. I mean, based on that daily, I'd be looking for an entry opportunity. I don't trade this either because I'm just not accustomed to the characteristics of its trading patterns, which every equity or every market has its own personality, and I believe that you should be proficient in the personality of the market that you trade. And I'm not the only one who holds to that belief. I mean, that's an industry-wide belief. So anyway, as far as Bitcoin goes on the daily, nothing to sneeze at. So it looks like we covered everything. So have a good evening. If you like my rhetoric, in the description, you'll see my Twitter handle. So maybe you could retweet me. Hit the like, hit the subscribe, hit the bell, and it's 4:15. So hit the road.